I think it can be hard for folks to get started also.
No doubt.
The analogy that makes the most sense to me is you're driving on a very windy mountain road at night. And you know the edge is right there, but you don't know how close it is. Is there a guardrail? Is there a shoulder? You'd like to go a little faster, but you don't know where the next curve is going to be. And knowing your numbers is like finding the lights on your truck, or maybe getting somewhere with street lights. And you kind of lower the anxiety level dramatically just by having a better picture of where you are and where you're headed.
Welcome to the Roots of Success, the premier landscapers podcast that brings you the latest tips and strategies for successful landscape business. I'm Jim Cali, one of the principals and coaches of McFarland Stanford. Jason New and I started McFarland Stanford to coach landscape businesses after years in the industry ourselves. Now, more than 10 years since we began, McFarland has a deep bench of coaches and subject matter experts who work with our clients on very specific issues of business. Whether you're struggling with people, profits, or just day-to-day challenges, our coaches and guests have the real-world experience and practical advice to help you build a thriving and profitable landscape business.
Welcome to the Roots of Success. I'm Jason New, co-founder of McFarland Stanford and partner, and host of another roundtable with the Roots of Success. So we have familiar faces with us here today. We've got Jim Cali, Chris Psencik. We also have some new faces who are going to join us today, Jennifer Murray and Ian Hanemann. And so today we're going to do a deep dive into financials and how financial health checkups, evaluations have really helped businesses evolve and change for the better. Also understanding benchmarking and really the numbers on how to drive the business forward. And so we're going to work together today to talk about some exercises that we've found help us, and also some good terms and terminology of things that will help you think about your business differently. Okay, so Jim, what have you been up to?
I've been quite busy. I've been facilitating quite a few ACE meetings lately. I've had two client on-sites, which I love, rolling up my sleeves and getting my hands dirty in all the businesses, and certainly the same thing within the ACE peer group leadership. It's busy, but that's normal for us, right? That's what we do. And I'm excited for the coming months and what that represents, and certainly the new clients that we're taking on here shortly, and teaching them the McFarland Stanford way.
Awesome. Hey, Chris, what have you been up to?
We just closed out the year. We had a busy last year, and so we were very excited about kind of how we rounded out the year. And we've got some great stuff coming in the next 18 months that we're starting to roll out with our peer group programs, and some different team development things that we're starting to do. And so we've got a lot is coming, and this is how we do it at McFarland Stanford, is we are always trying to find new creative ways to solve challenges and get out there and help our teams get better.
And the funny thing is, you even had people in the office this week. So even when you're back in the office to get work done, you had a whole team in the training room.
Yeah, and it's nice to have them at our place for once. My wife appreciates that.
Sure.
I appreciate that. But yeah, it's exciting to have them in a space that we can now do that team development on site, to get them out of their offices and into a great opportunity for we can now present that information and help elevate these opportunities for all these different team members.
Yeah, change it up. That's great. Awesome. Well, Jennifer, would you mind jumping in and introducing yourself for those who haven't met you?
Sure, absolutely. So I'm Jennifer Murray. I have been with McFarland Stanford, a little over 5 years now.
Yes.
I am a lifelong finance geek. I love everything to do with numbers and making money. I started my career as a commercial lender at Chase. I've been an investment banker at Morgan Stanley. I've been a credit officer at AIG. I have been a private equity person from the dark side, buying and selling companies, a finance professor. So if it has to do with finances and anything numeric, that's my jam.
Mm-hmm. Awesome. And Ian Hanemann.
It's great to be here. Been listening to Roots of Success for a while now, but I'm the dedicated financial analyst for McFarland Stanford team. So I'm in charge of collecting financial data for all 200 plus of our ACE peer group clients. I'm also involved in our outsourcing accounting team. So I do bookkeeping for multiple companies involved in our outsourcing accounting. Just really get involved in their KPIs, get involved in categorizing transactions, payroll, and everything in the background of it. I graduated from Spring Hill College, and I have my master's of business administration with a concentration in logistics and supply chain management. So came from the background of supply and demand, the vendor and client relationship, but really past year and a half with McFarland Stanford diving into the financials, and I'm truly glad to be here at Roots of Success and talk about, some data today. Be great.
Appreciate you guys being here. All right, let's get started. Jim, Chris, can you talk about some of the things that we're doing largely around the larger conferences, and then specifically then jumping into the events of all of our peer group meetings and the program that we're doing there?
Well, I know as we kind of move into 2026, I'll kind of echo the fact of Ian has been a huge piece of what we kind of launched into in 2025 with a lot of the stuff we're going to cover today and talk about today. And I know we jokingly refer to him in a couple of our groups as being the voice. He's the voice that if your financials are bad, you'll get to hear his voice. He makes you feel very comfortable and soothed about how bad the numbers look. If your financials look good, he's the voice that lets you know how confidently you walk into the year. And so I know Jared down in Baton Rouge, he always references him that he's like, we may be just sucking wind, but when Ian explains it to me, I want to run to a wall because I feel so confident about what we're going to be able to accomplish from a voice standpoint. So as we're getting ready for this year, the financial aspects of what Jennifer's doing on the valuation side, what Ian's doing on letting people know where they stand, how they stand, is really going to help us be able to take these peer groups and all of our members and all of the landscape companies that we work with across the country to really be able to understand what they're working with and how we elevate the game by doing stuff with these financials and learning what and how we play in those spaces to use the levers that we have to be able to manipulate and get what we need out of these businesses.
Right. I have to ask the question, do you have to be an ACE to use these services? No, you just a green industry member, right? And so, yeah, we're talking for what we do today, but I would just say it's the clientele. The other day I was on a podcast and we're talking about the counts. I mean, certainly we're grateful for the ACE clients we have, but we have over 700 clients and those are not all ACEs. So if you're interested in any of the things that we speak about today, you can certainly jump in, reach out, and we can help you through the things that we discuss here today, what it means to your company and how we can motivate your teams.
Well, I'll jump into that. I would say numbers have been an instrumental part of growth in just my career. So when you're in the industry and numbers and working through what metrics matter, what financials mean to a company, but even the team beyond that. Early in my career, I worked at Brickman Group. Numbers were a huge part of our success and just the training aspect of how to win, how to do well operationally. And so we had things we looked at, Gantt charts. If anybody remember the time Gantt charts were a thing. Of course, if you don't know Brickman, then you know Brightview. That's who merged with Valley Crest to make Brightview. But that's what we were trained on, is numbers in the early part of how do we manage things? How do we build our schedules? How do we look at seasonality to make sure that we're hitting certain numbers? And so our hours versus budgets, you name it. So these are the type of things early on that was a win for us to know our numbers and to know that we were profitable, we were doing well. And I was just getting to know the industry. I was just a young manager as an account manager for the firm. And it was great for me because I didn't know where to go with it until I knew those numbers. And so that's a big part of it.
Yeah, and I think the piece I would add too, I mean, when I was going through school, I was learning boots on the ground of how to do the landscaping aspect, apply my knowledge and experience to how we mow grass, how we install shrubs, how we do all these different things. But I will tell you, Texas A&M did not do a very good job of preparing me for the accounting piece that really comes into how you run a business, how you operate a business financially and profitably. That it really wasn't until, I got involved with Jim or, later in my career where we actually sat down with a P&L and we would go line by line. And it took a lot of questions of, hey, your cost of materials are up 25% month to month. What did you buy? And it's as simple as I'm going to go look at the credit card statement because I don't know. And it started with that, just that line by line P&L management.
But Chris, I'm going to stand up for Texas A&M just to hear a second. It's not just A&M. None of the schools prepare for the numbers. And I think that the comfort level with the numbers is something that's certainly important. It's also something that there's a lot of people that are trained in the world outside of horticulture that can come in and step in and help the green industry know what to do with the numbers. But I was thinking as you were talking out loud, Jason, earlier, you used the word numbers and I'm like, it's kind of funny. Is it numbers? It's a KPIs. But the minute you say any of those things, everybody freezes. Well, it's statistics. Well, if you got excited about what was happening on the field when you were growing up, that was generally tied to what? The statistics of how well you were doing what you did. That's all it is. And unless the team knows how they're doing, when they're doing it, and that the items are correctable in the middle of the game, the middle of the month, because it's always 30-day months we're running in, right? You can make an effect based on knowing those numbers. And Ian, I'll give you kudos for helping our clients know those pretty well and make it realistic and making people, like you mentioned a second ago, Jared, run through a wall to do something about his numbers.
Well, and as a prompt to that, what you're talking about is, how often should we look at these things? How often was it important for us to know these things?
Every day.
And I think that's a big part of what you've been helping not only your ACE peer group program with, but because you're in our outsourced accounting team and working through clients. I mean, we do that quite well. Can you talk to us a little bit more about
100%.
that?
And as a dedicated financial analyst, I'm reaching out to all 200 plus of our ACE peer group members with the Microsoft form every quarter asking for their raw data. I take the raw data and I calculate their KPIs. And to that point, and Jim, you mentioned this is so important for the owner to submit their numbers. The owner being aware of where their business is at, we have their peer group meeting a month or two later, and then we're able to present those KPIs and explain to the owners, hey, this is where you're at in total revenue. This is where you're at in gross profit, AR days, current ratio. Now, in specifically to the landscape and green industry, it is so important to look at trailing numbers, 12 months trailing. The reason to look at numbers 12 months trailing is, for example, if you're in a peer group and you have a company that makes their profit on snow during the winter months and a company that makes their profit on maintenance during the summer months, those companies, if you only compared the 3-month financial quarters, you wouldn't really get the best analysis. Specifically in the summer months, the winter company would have a very, at times, negative net profit. Looking at 12 months trailing cuts out the seasonality and it allows our peer group members to compare with each other, regardless of location, regardless of the breakdown of their business. And that is such a great benefit for our peer group members and our ACE members overall.
I think it can be hard for folks to get started also. The analogy that makes the most sense to me is you're driving on a very windy mountain road at night. And the edge is right there, but you don't know how close it is. Is there a guardrail? Is there a shoulder? You'd like to go a little faster, but you don't know where the next curve is going to be. And knowing your numbers is like finding the lights on your truck or maybe getting somewhere with street lights. And you kind of lower the anxiety level dramatically just by having a better picture of where you are and where you're headed.
And make decisions with your team based off how you feel, based off how healthy. You take a look at your profit and loss sheet or balance sheet with your team and you're able to say, hey, I'm noticing an outlier here. This was called out in the ACE peer group presentations. How can we make a decision to improve this issue? Or you see something profitable to expand on that section of your business as well.
I appreciate something you just brought up, though. You brought up the word team. It's one thing about an owner.
Exactly.
It's one thing about being the CFO or controller or a finance manager or the bookkeeper or whatever you want to call whoever's controlling the financial side of the business. But the owner and the finance person are not going to correct the problems, right? So when we use the word KPI, key performance indicator, or, it's one thing to know it, but the people who actually can fix those is the front line. It's the team, right? It's the project managers, it's the account managers, it's the production managers, certainly. And the wherewithal of understanding the numbers in the business is, in my opinion, the largest opportunity in organizations. And making numbers make sense. Like, I think there's accountants speak. Our vice president of accounting services, Stephen Alley, if he was here, I'd be sitting there actually after everything he says, I would say, okay, now let's make that make sense to everybody else in the room. Because if you can't execute based on a number or a challenge that you see, they're just numbers at this point. You're not going to be able to do anything about it. But Jennifer, what have you seen from a standpoint of, as you dive into financial health checkups? Let's just start with the basics, right? Sure. Give us a few examples of financial health checkup things that you've seen that the team's been able to execute on.
Right. So the financial health checkup that I do is very similar to a doctor checkup. He takes your blood pressure, your weights, maybe, runs a couple of scans. At the end of that appointment, if you need to back off the bacon or hit the gym more, but you have a game plan for the next year. The financial health checkup looks at 8 kind of key areas within a business to try to figure out where you need to focus for the next 12 months. So if you grew 25% at the top line last year, but you still feel really cash poor, this can kind of help you figure out why. If you're nervous about taking on new business because you don't know if you can afford the people or the equipment to execute on it, this can help you figure that out. So we look at 8 key areas: profitability, growth, asset efficiency, liquidity, leverage, cash flow. We look at risk management. We look at your organizational structure and try to see what's working really well, and maybe what's not working that well. And we try to make it approachable. We use that red, yellow, green framework that we use at Discovery with folks to kind of say, okay, what's going well? Those items are green. What's going not so well? Those items are red. And what do we want to keep an eye on, which is yellow? So if, again, you grew 25% last year at the top line, growth is green, right? But if profit is negative, that's a red. If your password in the office is your wife's name and the number 1, that's probably not great risk management, right? That's
that's wrong.
Yeah, don't do that.
Okay, got it.
And so, we at the end of this, we celebrate the greens, make an action plan for the reds, and then you kind of have some things that you can kind of move forward on proactively. And then it dovetails nicely with what Ian does in quarterly reporting, because that's like a quarterly checkup. How am I doing? Have I lost 5 pounds yet? Am I consistent in the gym? So it really fits nicely between, kind of an annual benchmark and the quarterly reporting.
I'd be remiss if I didn't say something real quick, though. You just named 8 items. I don't understand what 5 of those items are. You said liquidity. What does that mean to me? So help the audience, because if they heard those 8 things, they're like, why would I need to know that anyway? Are you going to help them understand that?
Yeah.
And that's the challenge.
Absolutely. Absolutely. And, to be clear, you don't need to know what any of those things are to want to be able to run your business better. When I talk to people about liquidity, it's like, how much cash do you have? Or if you don't have the cash, how fast could you get cash? What's the right amount of cash to have access to? Do you have a bank line? Those of you that have been around me know that that's one of my favorite topics. Having access to liquidity when you need it, so that you can take advantage of those opportunities to, build your business.
Yeah, I'd be remiss. I was on a coaching call yesterday with a gentleman. He just won a $1.2 million maintenance account. And immediately we were talking about cash flow, because cash flow is 100% where he is getting stonewalled right now, because he just started his business. They're 3 years in. He just landed the biggest contract he's ever had. He's now sitting there with a cash flow situation where he has to buy equipment. He has to buy trucks. And we were talking about strategies about how do we get from where we are today to what's going to be the biggest contract that's going to, skyrocket us in 2026, about the strategies we need to start putting in place to attack this work, go after this work, and strategically go execute this work, knowing that I'm sitting there with 1 crew right now and I need to have 3 crews and 3 trucks running within the next 3 to 6 weeks, right? So to your cash point.
Can you just click that button in QuickBooks that'll loan him the money real quick, right?
Or just go find your rich friend, right? And just go ask him for the money.
No, but that's awful. Some people do that.
Yep.
And that's where yeah. You've told people before, Jason, time out. No.
Great thing about what we're talking about is partner with people who've been through that process before, who understand the right way to approach it, and to give you some options. Because someone like Jennifer, someone like Ian, who's been around some of these things, but Jennifer's background is, if you're going into growth mode and you're scaling, you should know where your financial health is. Right. This is a big part of knowing also what decisions to make for financing and growth. And then having a plan behind it with the metrics to support it just gives you confidence in where you're going as a company. And so it's a big part of overall success for a plan, all right? Having a plan.
Well, and I think the planning part becomes super critical, because whatever stage of business you're in, whether you're 22 years old and you're starting your business, or whether you're 65 years old and you're trying to figure out what the next 5 years are going to be in your business, I've had the privilege of getting to work with Jennifer a lot on kind of as we're working with clients across the country in very different scenarios and very different situations where they're trying to figure out how do they maximize whatever the return is going to be on their business. And that's the question that comes up 9 times out of 10 is, Chris, I want to retire. I either want to sell this business, or I want to transition this business to somebody. Or B, I'm looking for cash so I can grow my business, and that's what that financial health evaluation does, is it allows you to know what those tools are, what those levers are, so that we can make those pivots and make those changes while we have the ability and the time and, the wherewithal to be able to do that. And so, I'm thinking of clients that, on the East Coast where, we're looking at a 5-year plan of how we're going to round this business out, and very quickly when we went through the evaluation, we figured out there's nothing here. What your setup, what your structure is currently, you're going to retire in 5 years and you're going to want to transition this, and nobody will buy this because you're just not structured in a way that it's going to be financially viable for somebody to want to go out. So what are we doing now? We went through the financial evaluation. We've got a plan. We're working through the plan now to figure out how to maneuver this business into a stronger position, so that when this person is ready to transition that business in 5 years, which is now 4 years, they're in a position to do that.
I think it's important to, if you have a destination in mind, whether it's building a $10 million revenue company or regional expansion or sale, you got to know where you're starting, right? You can't get to the destination if you don't know what your starting point is.
Well, Jennifer, that's such a hot topic right now, is buying and selling, being a part of this industry. There's some more talk of this than I've ever seen in the last 10 years. It's happening around us all over the place. So can you help us understand what the evaluation is? What does it do? How does it help us?
Sure, absolutely. I will say kind of activity-wise, it's been interesting. 4 years ago during COVID, PE was a huge player in the industry, remains pretty active, but a little bit less so. They're being pickier. But now what I'm seeing is, our team members, our ACE peer group members being approached by folks who want to sell, competitors who are just tired. They're getting opportunities to kind of take out adjacent businesses. So it's been fun to work with our clients on not just valuing their own businesses, but helping them figure out, can I grow through acquisition faster? So
valuing somebody they want to buy.
Yeah, absolutely.
Yeah,
absolutely. And also feeling comfortable if they do get that call from PE or, a competitor, that the price that they're accepting is a fair one. But I want to emphasize, a lot of the valuation work I do is not because people want to sell their companies, they want to build their companies. And you can't get to your goal, again, until you kind of know how far away you are. And then we can talk tactically about strategic plans, about what kind of business you want to grow. We talk a lot about maintenance being more valuable in terms of multiple than installation. So it gives you a bridge between, where I am right now and where I'd like to be in 5 years, 10 years.
Yeah. On a previous podcast that we did for Roots of Success with Andrew Gabrys, he was a guest and talked about some of the things that he had worked through and worked with as a part of these services, knowing his numbers, his getting valuation on his value as a company, gave him confidence to know if somebody were to call him and he were entertaining a conversation, he would know what a good offer would look like versus a bad offer.
Right.
What the conversation for him to have as far as the confidence in his business, what he brings to the table, what his team brings to the table, and ultimately for him, how the business operated in a way that was, he could step back, he could step away from the company, and his team was able to run it because they knew what to do with the numbers as well beyond what he was able to do.
Right.
I'm going to emphasize a little something differently than you just did though there. It was about his team. He did not have that team to begin with.
Nope.
So as he learned and understood the numbers, right, he worked with his team to get himself in a position. So if the team was not in place, Andrew would not have been able to do that.
That's right.
Right. And so, semantically, numbers are fantastic, but if anybody's going to be building the value of the organization, the value is not just in the numbers.
That's right. Well,
right.
The key takeaways in that was that numbers needed to be in an easy to read format that everybody could understand, and they all agreed on what the numbers needed to be. So there were goal setting and targets involved, and they understood from this valuation of what would move the needle, what would build the better value in our profit, what would build the better value in our team. So we're not getting confused on what we're working on. We're all working on the same things.
And I think it doesn't have to be super complex. I mean, several of you have been through the penny exercise,
What is that?
So the penny exercise, when you're educating your team, you start with 100 pennies in a dollar, and then you start to take out, pennies for your direct labor. And so that leaves you with fewer pennies. And then you start to take out pennies for your rent and pennies for your advertising. And then it becomes it's a great visual way to help your team understand, okay, here's the impact of us being sloppy with our hours, or not careful with our equipment.
Or here's the impact that if we aren't sloppy,
yes,
we can add that back
Look
in,
how
right?
many pennies we have.
Right,
Yeah,
right.
and we
And
can
add it
share.
back in.
We can share those pennies.
Right.
Absolutely. I think one of Barrett's clients did that exercise with a can of Busch Light. So whatever resonates with your team, right?
That was in Northern Michigan. That ties to anybody in particular, but we won't say that. But yes. Yeah.
Well, and speaking to that, I know Ian was working through a lot of things in our peer group program to help us build some of those metrics. Can you name some of the things that we've been able to identify for people to say, here's some benchmarking items, here's some things that people are looking at right now to help at least build a common language inside their teams?
Definitely. And one of the biggest benefits in joining the ACE peer group program, I feel, is really onboarding your financials. And what I mean by that is meeting with me. Yes, meeting was great. Well, looking at your profit and loss sheet and looking at your balance sheet. When I look at a P&L, when an ACE peer group member's first joining, I usually find some things in overhead that needs to be brought into cost of goods sold. That's not going to have an effect on your net profit, but it will have an effect on how you're viewing your business, your gross profit. That consistent indirect expense number that you don't want to eclipse every month. There's so many things that goes into realigning your P&L. And to Jennifer's point, to really gauge, evaluate how you're ready to sell is being aware of your numbers every quarter. Being aware of your numbers quarterly, and then really tying that to bringing that value to your team and just creating conversation about it. And Jim, to your point, having your team being aware of your numbers and where they are, that's how you're able to make decisions to improve your business.
And not do it all, and not be all on your shoulders to fix. Right?
Exactly.
You can't fix it all. Right.
It comes from the team. It comes from within. Exactly. And I will say, to the point of, I've seen so many ACEs, especially new ACEs, once they realign that P&L, they truly know what their cost of goods sold is or their indirect expenses are. They're making more impactful decisions to improve their profit, to get out of the red into the green, and then truly build a profitable business, not to sell, but a profitable business to grow for their team. And that's just huge value I've seen with the ACE peer group presentations, but also just knowing their numbers. That is such a benefit to the ACE peer group program.
And I will tell you 100%, as a former lender and a former private equity professional, if somebody comes to you asking for money, either in the form of a loan or equity, and they don't know their numbers, that's a huge red flag.
Right.
Huge red flag.
Mm-hmm. Yeah. So let's take a step back. I think we need to share this with the audience here. The language of finance is different, right? And Ian, you talked about indirect expenses. I know green industry professionals, I don't know what an indirect expense is. And I want to take a step back because, unfortunately, all of us around this table keep talking about things in accounting terms.
Sure.
And I want to help everybody understand, yes, we are, but you can't ask us any question that we're not going to be able to help you through it. And I would say that the financial terminology, that you will get a comfort level with it, so that if you're in a position to go talk to private equity, that you can talk the talk and walk the walk. It is a learnable language. It is something you're going to get a comfort level on, because I hear over fear. I'm like, no. Like that's why you're with us. We're going to help you get there. And so at the end of the day, whether you're running a green industry company or you're an entrepreneurial type of person, the next thing you do is buy another services organization or a product company. The language of business is the P&L.
Absolutely.
Okay. And I'm talking P, the ampersand, and the letter L. Okay. I am, because some people think it's P and L. I mean, ironically, and that's okay. We're going to get you there. And I want you to understand that we are a receptive, approachable team. Mm-hmm. And we're going to help all aspects of that. So as the language we talked about here, the things that Jennifer's laid out that she can help improvements with, the KPIs that Ian's laying out for you, we won't just talk in terms of that. We will ask you questions like, do you understand what I'm saying here? What indirect expense means and how you can affect indirect expenses and bring more profit to the bottom line of your organization. Give me an example of an indirect expense, Ian.
Indirect expense, rent, utilities, everything that will hit below the line, you expect, if you're not growing your business substantially, to stay consistent.
Correct.
So those indirect expenses, that overhead, that number should stay consistent. Of course, if you're growing dramatically, then you'll see that increase. Your rent will increase. Your insurance price will increase. You'll take on that another loan, and that principal will hit below the line. So
but if you don't pay attention to those, you can do everything you can do in the field properly, and those can eat your lunch.
Exactly. Mm-hmm. And Jim, to your point, you don't start a landscaping companies to know your numbers. You start a landscaping company to help people to
make the world a beautiful place.
Exactly. And then, but knowing your numbers helps improve the business, grow your team, and just it comes all around to just a better overall business, and you're happier. You're truly happier as an owner.
I think another good example of that, when I talk to peer group members about cash flow, people get super panicked. Like, I don't know what that is.
Yeah, exactly.
And so we kind of back up and we talk about, okay, last year you made X, So where did the money come from? Did it come from profitability in your business? Hopefully so.
Right.
Did it come from borrowings? Did it come from a capital injection? Were you better at kind of collecting receivables and bought a little bit less inventory?
Right.
Those are all kind of cash inflows. And then where did the money go? Because, a lot of times we're spendier than we think we are. You have to make those capital investments. Maybe you paid yourself a big distribution, which is awesome. But just breaking it down into where did it come from and where did it go?
Yes.
And that helps you build kind of a more proactive plan for, okay, I got a plan for where it's coming from in 2026, and here's where it's going to go, so that you can be a little more strategic about that in advance rather than waking up on December 31st and like, where's the money?
Well, 100%. Do you need the Raptor or do you not need the Raptor? And if I wait, looking at cash flow statements, I should know theoretically from a forecasting perspective that maybe the Raptor's the end of next year,
Right.
not now.
Right.
But making that arbitrary decision without looking at exactly what you discussed, it's just that. It's an arbitrary decision.
Right. Right.
Mhm.
And then you wake up and you're like, oof, I wish I
Yeah.
hadn't bought the Raptor.
Yeah.
Jim, and great
Maybe you
point.
don't ever say that.
No, you should. Trust me.
Jim, and great point to forecast so that from December 31st to January 1st, you're completely laid out for the year. And you know specifically month over month what you need to hit to stay a profitable business and grow your business, truly.
Yep. And for those of your operational items, I heard indirect, and instantly indirect in our world might be
Yeah.
non-billable time. Really? So on the operational side, these terms can be interchangeable. So you got to be careful on how we're creating this common language with our companies, with our teams, and what each things mean. So we got to define what that means for our teams. And that indirect piece might be what we're tracking for windshield time,
It's 100% that, Jason.
non-billable time, those types of things. So ultimately, that's where the financial conversations come into play and where our team can help you with that
And everybody be on the same page with what
Yep.
those terms mean.
completely.
Yeah.
Looking at some of the benchmarking and going through things, Jennifer, valuations, what have you seen, I guess, some of the success stories with people here for you that you've worked with? I know a few here in town. Is there anything that you would mention that have helped people make decisions?
Yeah, so I can think of a couple of instances where I've done, kind of a base valuation on the current business. And then business owners say, okay, that's not the number I want. I want to grow fast. And so I want you to help me value this acquisition opportunity so I can bolt on something faster. And so it's been kind of a fun cycle to see, here's the value of the base company. Let's look at this one. Does it make sense? What's it going to do for my value overall? What's it going to do for my business mix?
Why does bolting on increase the value of a company?
Size matters.
No, okay,
Bigger
it
is
does.
better. Yeah.
Bigger is better.
Yeah.
Right? From what perspective? The multiple will change as you're bigger? The profit should naturally change? Like,
Hopefully both. Yeah.
well, that,
Yes, but absolutely. So I would say, there are certain kind of tipping points where your multiple is going to reflect the benefit of size.
okay.
I would say, and there's some informal ones, but definitely as you get to kind of $10 million in revenue and higher, that's going to get greater interest from private equity and some folks who can afford to pay pretty big multiples. And so
So that's top line. Top
that's-
line
that's
over 10
top
million,
line, yeah.
you're going to get to a different level. Okay.
if you're consistently profitable
Right.
and that trend is positive, that's a good thing from a multiple perspective. We talked about business mix. Maintenance gets a higher multiple than installation and probably always will. So if you're thinking about bolting on a business that will help your multiple, you may want to think about buying a book of maintenance.
Okay. Don't hate me for asking this question. What's a multiple?
Sorry. Yeah. Fair question. Fair question.
Yeah.
So it's what I would be willing to pay you as a multiple of your cash flow.
Cash net profit? Like, what do you-
No, not net profit. So it's a great question. People love to throw around multiples, whether it's at Grow Conference or Connect. Like,
Right.
oh, so and so got offered 8 times for his business.
Yeah.
And you're like, 8 times what?
So 8 times is actually the multiple. That's the you find a number and you multiply it by 8. But what number am I going from?
Well, so that's where the art is.
Okay.
And so generally speaking, you're starting with your operating profit. So after direct and indirect expenses, then you're adding back non-cash expenses like depreciation
Right.
and amortization. We generally look at profit excluding owner salaries
Sure.
because some landscape business owners pay themselves super well.
Sure.
Some people just pay themselves through distribution. So
The owner may not need to stay on, so that's kind of why you're adding it back, because that's going to show what the value of the business is if somebody else was to purchase it and add it into their own company, right?
Absolutely, absolutely. So you're trying to get to an adjusted cash flow number. And so that's why it's important when people say 8 times, like, okay, are we speaking the same? Did you add back this? Did you add back that? So you kind of have to be a little granular about how you're talking about that cash flow number.
Because I think most people would say it's 8 times EBITDA.
Right.
EBITDA being another one of those words, earnings before
Earnings
interest,
before-
taxes, depreciation, and amortization.
That's
They
right.
vomit now.
Right.
But I mean, I know what that means, of course. You need to worry about that on a daily basis.
Not so
Not so much.
Not
But
so much.
you need to get there on a monthly basis, at least if you're looking to do any of these add-ons
Right.
or sell or something like that, right?
Right.
So hearing you talk about it from a cash flow perspective, it's just another way to value the business.
Absolutely right.
And your buyer is going to have their way.
Of course. Yeah. I'm going to look at that number a little differently maybe than you do.
Right.
But back to your original question about size,
Right.
I will say that companies that have established processes
Okay.
and leadership teams
There you go.
and clean financials,
Yes.
all of those accrue to the benefit in terms of value. And those tend to be attributes of larger professionally managed companies. And so that's another reason why size matters.
Got it.
As we're starting to talk about some of the wins or stories that will apply to what we do with finance, Ian, do you have any early wins, or do you see people with the benchmarking idea of something they've learned through the ACE program? Have you heard of anything that's really helped them, or even your outsourced accounting clients?
The more effort you put into knowing your numbers, the more you can make impactful decisions to improve your business. And that's the bottom line of when you first enter the ACE peer group program, or to your point, you come to us as an outsourced accounting client. The more you're in depth with your numbers, the more you're in depth with, us as a team working through your numbers, that's how you truly build a profitable business. Not that you don't come to us and you're not profitable already, but there's a lot of things, that net profit may be really high, but your cash flow may be bleeding, to your point, Jennifer. There may be many things that you're missing, tax-wise or sales tax-wise, that you're not aware of, and that's where we come in to help. Being more aware of your numbers and knowing truly where everything hits on the profit and loss sheet is how you improve your business.
Yeah.
And that's really, I've seen numerous, multiple, once you onboarded with the ACE peer group program, improve their financials and make impactful decisions on it from there.
Well, I will be remiss not to say this, but you work with over 200 companies on a quarterly basis to see what's doing well, not only with what's doing well, but people that are driving their business forward, having growth. So we find these are the best companies in the U.S. working on this industry.
And Canada.
And Canada. That's right. And so as you start looking at this, what is good? So those benchmarking pieces are, well, what are my targets and what should they be and what does good look like? And more importantly, on your outsourced accounting piece of it is, it's live financials. I know where I am today because we reconcile daily. We get all of our payroll done every single week, every day. We're auditing things. And so people go look at Wednesday today and know where I am as a business and not wait for that quarterly. So it's a very exciting way to start, know your numbers in that. Chris, Jim, would you have anything that you want to share, some wins or things that you may want to add to that?
Yeah, I would say over the last, 10 years that we've been doing financial services for clients, both in the peer group network and outside the peer group network, it has been very exciting to see the amount of change that happens. So many, and I could just run through a laundry list of people that I've spoken with where when they came in, it was, we work really hard, and we're out there and we're working 65, 70-hour weeks and we're grinding, and they're getting to the end of the year and they're going,
Why?
I made no money and I don't know why. Right. And that's where the conversation, oftentimes that's where it starts, and that's where we are involved at that front end, where we're like, well, let's take a look at that, and let's start to look at what we talked about earlier, the indirect time, the hours, and like there's working hard and there's working smart, and we in the landscaping industry, and I think we all fall guilty of this, we're really good at working hard. We're really, really good at working hard. I think where the struggle and where the education comes is how do we work smart, and that's really what I think all of this encompasses today is it's learning how to maximize what you're doing in a profitable way that's going to drive your business forward and allow you to create more opportunities for your team members, your field team members, where you're paying top of market And that's okay because you're making the profit you need to make to be successful as a business, right? So when we think about what that looks like for our clients, it's helping to educate them on the basic one-on-one stuff of how do we work smart and stop working so hard, and put that into a way that it's going to allow you to leverage up and do things that you probably would not have been capable of doing before.
You just said that perfectly, by the way.
Absolutely.
You did. You nailed it, because that's the story, right? The only thing I could add to that would be invest in your numbers. As we started the practice coming up in 12 years ago, numbers are not the priority, and numbers need to be the number one priority to move the business forward. And what I mean by that is we discount the value of what the financial side of the business and getting those numbers correct and having the daily financials updated, and how that lends to growing the business. And what I mean by that is when I would look at the profit and loss statement today, and it's the 10th of the month, I need to make sure expenses have been in the books since the first of the month, so that I can do what? I can realize, have we billed enough? Are our expenses extraordinarily high and we haven't billed? So that should cause me to want to get things billed, right? And then re-looking at it on the 15th of the month, and re-looking at it on the 16th of the month. I'm laughing, but I'm not, right? Because you can land this airplane perfectly on a runway to what you think the top line will be and the bottom line will be if you're paying attention through those numbers. Ian made the statement about investing time and knowing your numbers. I want to go a step further and say, if you invest a lot of time in numbers in the front end, it actually becomes more natural, and your investment time is going to go down because you're going to be able to see through this faster. Okay. But if you just go hire an outsourced accounting firm that does your numbers based on statements at the end of the month, you're already 45 days behind. Okay. It's the 15th of the month. They're closing your books. They're putting items in your profit and loss statement that were incurred on the 3rd the month before. So if you notice a change, or you do need to pivot, to use a word that you used earlier, Chris, if you need to pivot, you're already 45 days sunk, and you're only going to be able to affect what? 15 days of the current month, right? And so the idea of live financials, and if you're going to outsource this, or if you're going to have it in-house, if you are not running your books on a live basis where effective change can take place based on what is being shown in your P&L, you're shortchanging not only yourself, but your entire team and your growth long-term. And that needs to be your goal. So if you're going to consider bringing somebody on board, it needs to be about live financials. It's not about the close. It's really about being able to use your P&L every day and using our outsourced accounting services. That's the whole premise of why we started it. You want to know why? Because Jason and I in the first days, and then you not very long after, would go in and we'd train bookkeepers, family members who've been keeping the books forever, and we would get them up to date on how to keep live financials. And then they quit.
I would add, this is more than just receipt tracking.
No, gosh, yes. No, by the way, receipt tracking is not about collecting receipts. Receipt tracking is making sure the receipt's actually in QuickBooks.
Yep.
I don't really. That's a whole. It has to be in a platform, be it QuickBooks or some other platform, that you can look at it. And if you charged it yesterday at Home Depot for $37.10 to the Smith residence, I want to be able to pull up a P&L. So a profit and loss statement on the Smith job, and know that $37.10 a cost has hit that job. Not knowing that is ultimately going to hurt us at the end of the day. So when, taking a step back, and we've been talking about financials and knowing your financials and how good that's going to look as you're growing, whether you want to buy another business, sell your business, or all those type of things, as active as you are in pursuing the right mower that's going to drive the efficiencies inside your organization, you have got to drive the right set of books, because that truly is what's driving the efficiency inside your organization. So, does that make sense?
That's exactly how I would explain it.
Okay.
And I think, kind of going back to the point, the proudest moment I have is when I get to see the light bulb go off with some of these clients, and one particular comes to mind up in Gillette, Wyoming, when we were basically looking at his cash flow. Ian knows this. He was not going to make it. Like he was on a crash course to going out of business, because he was building a facility, he was investing in equipment, he was investing in a lot of stuff that was eating up a lot of cash. And it wasn't long before we realized where the wall was going to be and how fast he was driving towards it, that we had to get our hands on it. And I think the proudest moment I had was when he sat there in the room and was able to pull up his P&L in the meeting, and he called our accounting service, and Logan got on the phone, and they talked through the financials live in our group meeting. And it was fun to watch him have good conversations and bring up stuff that he never had education on before.
Right.
Knowledge is power.
And now seeing where he's at today and how we're now able to leverage that up and what he's going to be able to do is exciting.
Well, I just want to say it's been a great having everyone today in this conversation and helping emphasis for our audience understand how important numbers are and ways they can interact with us to get to know that better. And so thank you for joining us today. Thank you for our guests, Jen, Jennifer, Chris, Ian. Thank you guys for being here and
Thank you,
sharing.
Jason.
Thanks.
So if you are interested about learning more around valuations, financial health checkups, looking at how our outsourced accounting or CFO practice can help you, please reach out to us. Check out our website, connect with us, email us, call us, however you want to do that. But we look forward to hearing from you. And until next time, we'll see you on the next Roots of Success Roundtable.
Thank you for listening to this episode of Roots of Success, brought to you by the subject matter experts at McFarland Stanford. Have a question you want our coaches to tackle in a future episode? You could submit that at mcfarlandstanford.com/podcast. And to find more helpful content from McFarland Stanford, follow us on X, LinkedIn, Instagram, and Facebook. If this or any of our episodes have piqued your interest in ACE peer groups, we encourage you to join us at ACE Discovery. Just check out the events tab at mcfarlandstanford.com. This is Jason New, co-founder and principal at McFarland Stanford. We'll see you next time.